The stock market's dropping, and that is not a time to panic, but it is a time to think about what kind of risks there are in companies and do they have a long-term future. One of the things I think investors need to look at is don't look at the stocks that have been really hot over the past few years. Look at the companies that have a durable competitive advantage, who have a really solid balance sheet, who are generating cash, who can endure a downturn. What happens to a company when the stock falls and they can't simply issue more shares to keep their operations going? That's something I'm going to highlight today with each one of these companies. I have 5 stocks that I think investors should be selling before the risks get even higher. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, FinChat. I'm going to be using FinChat throughout this video. And the reason is this is the research tool that I use constantly. They have all of the information for over 10,000 stocks all around the world. You can look up valuation metrics. There's a screener, there's transcripts, everything that you need all in one place within FinChat. That's where I'm going to start today with Rivian. Rivian, obviously well-known new automaker, but very, very highly valued. $12.6 billion valuation today. And I'm going to start this let's just go through their financials. And the first thing I want to look at is the number of vehicles they have produced and delivered each year. We can even look at this on a trailing 12-month basis. Look at that. Their deliveries and production are actually declining, and they're expecting to decline again in 2025. You can see that right here, their outlook. This is, again, within FinChat. You can get everything in their investor relations with their outlook for the year, just 46,000 to 51,000 units of deliveries. So if we go back to this chart, that's going to be down more likely than not from 2024. And why is that a big deal? Well, this is the revenue, is the light yellow here. And then in blue is net income, and orange is their free cash flow. So you can see that Rivian is burning through billions of dollars each year in free cash flow. Last year, they got a little bit more efficient. They didn't produce more vehicles, but they reduced their cost of their vehicles. They've actually also gotten some upfront payments from Volkswagen, their partnership with Volkswagen. So keep that in mind. This is not the real free cash flow number. This is actually partly prepayments that are going to have to be ultimately paid for basically later. You can see that here in their unearned revenue line, $1.3 billion worth of unearned revenue. On top of those operations that are losing money, look at the company's long-term debt. Debt is not something that a company that's losing money, that's still in startup phase, should have on their balance sheet. But Rivian has a lot of debt on their balance sheet, $4.4 billion worth of debt. They're going to either have to refinance that or repay that in the future. On top of that, they recently announced that they have gotten a $6.6 billion loan from the Department of Energy. Now, that loan has not been distributed, and we don't know what's going to happen with that given the Trump administration has taken over. But assuming it is distributed, that is a loan. They do need to pay that back. That is not a gift from the government. It is a Department of Energy loan. That means that Rivian is going to have at least 10 billion, probably more like over $11 billion worth of debt on the balance sheet, and still their operations are not making money. Now, what happens to demand for their vehicles, margins for their vehicles, which they still think are going to be in excess of 25%? What happens to those margins when you start producing 200, 300, 400, 615,000 vehicles they think they can make by the end of the decade? I think those margins are going to continue to come down. That is exactly what we've seen with Tesla. There's no reason that Rivian is going to be an extremely high margin automaker, especially with all the competition coming into this space. Everyone else in the electric vehicle demand is not growing as fast as supply is at this moment. And while Rivian is a great story, and I think they do make great vehicles, that doesn't mean that it's a great investment. So this is a company with high debt, huge cash burn, and if their stock declines, this is going to be one that could be in a downward spiral for investors. The next two I'm going to highlight are in this quantum computing craze that we've seen over the past couple of months. These quantum computing stocks have gone crazy since Google said that they made some breakthroughs with quantum computing, and it was actually the smaller companies that had a bigger impact. Google wasn't actually all that impacted, but Rigetti Computing, look at the company's valuation today, $2.7 billion valuation. That's even after the drop in shares. Let's look at the drawdown in shares, down 61% from their peak. But you can see that we've seen this drop before. The stock was down 97% since late in 2021. And why is that? Their operations just simply don't generate any sort of valuation near this. You can see that over the past year, $10.8 million worth of revenue. Net loss was $201 million. Net cash burn, free cash flow, was actually negative $61.7 million. So there's nothing here to say that Rigetti Computing is going to be a company with a durable competitive advantage in quantum computing. Enterprise value to sales 230. That is a crazy, crazy multiple, even for kind of an early phase company. Another one that got a ton of attention was IONQ. That bubble also starting to burst. We can look at the drawdown here, 64% from its peak, still a $4.6 billion valuation. Again, the operations do not really justify that. We look at total revenue, net losses, and free cash flow. You have $43 million worth of revenue, losses $332 million, and free cash flow negative $123.7 million. Not sustainable companies. And again, the framework to think about this is not, are they going to have a bright future 10, 20 years from now? It's can they get to 10 or 20 years from now? What happens if the market collapses and these stocks fall 90, 95%? Is there a way to actually fund operations? And the answer for both of these companies is probably not, without diluting shareholders in a massive, massive way. The same goes for a company like SoundHound. Again, just caught fire in kind of late October, early November, and the stock just went crazy, but it still has a $3.8 billion market cap. And let's look at these same three metrics. $84.7 million worth of revenue, $350.7 million worth of net losses, and $110 million in net negative free cash flow. So again, not a sustainable business, and SoundHound is in the AI space that's been very hot, especially AI applications, but SoundHound has not proven that they have a durable competitive advantage in their particular markets, and they're not able to make money on each one of their contracts and transactions. So what's to say that one of these generalized artificial intelligence tools isn't going to just take over their business? Where are we going to see margins start to expand for SoundHound? We haven't seen any of this progress that we should be seeing at this point, as artificial intelligence tools are getting better and better and companies are positioning themselves in the market. I just don't see how SoundHound is going to be one of the stronger players in the market long term. The final one is Microstrategy. Now, what Microstrategy is trying to do is really play an arbitrage game with Bitcoin. Don't really look at their operations. It's actually Bitcoin that you need to be worried about. Bitcoin is in free fall in just the past day, 4.3% decline for Bitcoin. But you can see that over the past year, it's been extremely volatile, peaked over 106,000 per token. Now we're down at about $78,000, $79,000. The problem for Microstrategy is what they do is they sell their stock and then buy Bitcoin. So if the value of the Bitcoin on their balance sheet is actually lower than the market cap of the company, about $75 billion today, they're trying to play an arbitrage game between that value of Bitcoin and the value of their stock. So the higher value of their stock is, like you see right here, the more Bitcoin they can buy, as long as that net asset value on their balance sheet is higher than the asset value of the Bitcoin that they hold. But if the stock starts to fall, and again, we're seeing this today, that arbitrage opportunity is starting to decline. If we go to today's chart, down 4% for Bitcoin, but MicroStrategy down 15%. So as that spread starts to drop, you're going to get a fall in MicroStrategy, not only because Bitcoin itself is falling, that's going to be part of the drop in MicroStrategy, but also that premium that investors are willing to pay because that arbitrage play is starting to be executed, that's going to drop as well. So kind of a double whammy for MicroStrategy as Bitcoin drops and confidence in their strategy starts to erode. So there you go, 5 companies that I think are in real trouble if the market continues to drop. I think they're worth selling because the risk is simply not worth the reward. Those companies are Rivian, Rigetti Computing, IONQ, SoundHound, and MicroStrategy. Again, this isn't to say that any of these companies couldn't be something in the future, but they are currently all burning cash flow from their operations. They are not sustainable operations, MicroStrategy aside here, and their businesses could really deteriorate and dilute investors really quickly if their stocks continue to drop. That is a downward spiral that can get really bad for investors really quickly. But let me know what you think about those 5 companies and those 5 stocks. Don't forget to subscribe to Asymmetric Investing, not only here on YouTube, but also the Asymmetric Investing newsletter. There's a link on the screen and a link in the show notes. And thanks to this video sponsor, FinChat. You saw a bunch of FinChat's features here, but there is more that I haven't covered. You can go to finchat.io/ASYM to get 15% off, and you can try it for free for 2 weeks. So just check that out because I think this is one of the most valuable platforms available today. I'm a paying customer. I'm also a power user, use this constantly. Thanks for watching, everybody. We'll see you here next time.